And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to Market Forecast. Wednesday, May the 11th, the day we've been waiting for probably all week with the CPI numbers coming out. And we all seem to be waiting for the world to change. Thanks for the suggestion yesterday. So, the CPI numbers, they came out lower than last month, which is good. But there was also a bit of a miss on the expectations for this week. So, the core CPI April, month over month, we're looking for 4%, came out 6%. CPI overall April was 1.2%. We were looking for 2%, came out 0.3%. I'm sorry, 0.2% came out 0.3%. All this sounds like a bunch of gobbledygook, but what we really need to know is we did get a downtick in inflation, but it wasn't as much as they were expecting. We're still waiting for the 9:30 EIA petroleum status report. We do have one talking Fed that I know of today. Bostic is set to speak today, and 10 noon today, Central Time, we've got a 10-year auction, so we've got some more information coming out. Welcome, everyone. I'm John. Thanks for trusting me with your time. As always, we're looking at these markets in context, thinking about risk management and trying to stay patient. This move this morning, I think, has provided a pretty decent opportunity for those watching the 10-year this morning. We're going to see that in the charts very shortly. But this morning, kind of sitting down at 5:30, just kind of looking at everything, it seemed a little bit of optimism that we've seen the worst of inflation had seeped in to prices in U.S. stocks that were set to open higher in early trade. Not so much now. We've got the FOMC Fed's rhetoric yesterday has its members mostly looking for 50 basis point increases moving forward, but there's also the hint that they're willing to change if need be. In earnings, Toyota is a disappointment for everybody this morning. We're waiting for Disney after the close today. As we round out the earnings season, crude prices have firmed as China has reported that there are no new COVID cases in half of Shanghai. I don't know how they get that stat. Half of Shanghai has no new COVID cases, but it's moved closer to lockdown, ending of lockdowns in Shanghai, so we can maybe a little bit more demand for crude oil. Yesterday, the API announced a 1.6 million barrel boost in inventories here in the U.S. A little conflicting information. As always, make sure you like, share, comment, question, feedback, and heckling and love are always welcome here on the forecast. And subscribe to our YouTube channel. You get notified when we do go live. Taking a look this morning at the VIX, was down a little bit before the number came out. Well, actually, a little bit after the number came out. It was still down just a little bit. Nice little pop in the VIX after the numbers came out. 32.44 is the last time I looked. Dollar index 103.89, largely just flat. And the yield on the 10-year got a nice little pop up to 3.04%. We're seeing, again, a little potential breakdown opportunity for us in the 10-year yield. Yeah, that was I got to say good morning to everybody. Frederico, Shaw, Kevin, Terry, my brother Rick, love you. Alfred, Glitter Sandwich, JD, it's good to see you this morning. Zorain, Bill Phillips, Devont, Tachyon, chilling with Dylan. What do we call what just happened? Knee-jerk reaction. Good morning, Sarah. Good morning and prayers and love to you as well. Dan Trader, good morning. Devont saying, I think the CPI numbers are decent, but that 1% miss on the forecast has algos in a tizzy. Well, it's got a few more people in a tizzy, it looks like. LOL, yeah, the nosedive. Theo, good morning. Charles March, good morning. Rough day for you yesterday. I've had to learn that there are some days that just don't fit my plan no matter how much the market is moving. No trading is trading. Absolutely, Charles. No position is a position, and it's important for us to recognize when the market is not aligning with our strategy or that we don't have a strategy that aligns well with the market. That's why when you sit down, Charles, and you do your homework in the morning, use a consistent lens. You can set up some sort of a outline that you can follow, and that outline is going to change over time. But it's always about, I think, looking at the market in context, trying to seek accurate context, and then forming hypotheses as to three situations or three outcomes of what you think might happen, and then watching for one of those outcomes to begin to ring true, and then trade the strategy that fits that outcome or that hypothesis. You know, if you think the market's going to continue lower, you're looking to sell strength. You're not looking for buys. You think the market's going to range all day. You're going to just let that range establish itself and then work the extremes of that range. There's always, contingencies, of course, to everything, but I couldn't agree with you more. Some days they're just not good days for us to trade. Maybe the market, we've never seen a market like that before. Maybe we just don't have a strategy that comes to mind to play that. It's probably best just to relax. There's nothing wrong with capital preservation, Charles. Scott saw and he conquered. Good morning. The sun's shining in the Northeast, but shining here too. We've got 76 degrees and sunny here in Chicago. Jackalo, good morning. Ricardo, good morning. Kevin, good morning to you. Ahmad, J-Trades, Brian, level 2. Pretty nice full session so far, right? Glad you liked the song. That was a suggestion from the recap yesterday. Level 2, good morning. Zeke, DK, Rusty Golfer, good to see you. No COVID in Shanghai. Oh no, we're going to continue to pray for the best for everybody. But that was a horrible situation that they put those people in. Three lines inside got short the top of the profile, 40-45, waiting for CPI to create profile rotation. Probably one of my best trades to date this morning. Good thing you got luck. Nice job. Anne-Marie, good morning. ZK is heckling me. Heckle. 50 points in a matter of seconds. Yeah, that was pretty quick, wasn't it? Sonny, good morning. Force driven. Chris Johnson, cheers to you again, Force driven. Keith, good morning. Carol, chilling with Dylan. Would you consider the move other time frame participants or P shooters? Well, there's some pretty decent volume. I'm looking in the S&Ps. I don't think it's necessarily moved the longer time frame into executing yet. They may be executing or doing something during regular trading hours when everybody is present. Charles, yep. Kevin, plans are worthless, but planning is everything. Dwight D. Eisenhower. PD, good morning. Eddie, good morning. Steven, RPS Central, and Michael H. If I saw a couple of new names there, welcome to the Market Forecast. We're going to try and find accurate context again and always think about risk management and patience. All right, I think we are in pretty good shape. It's a pleasure to be here with everybody. It's one of my favorite things to do is to talk trading with traders. We do have group coaching today. We've got a request to focus at least part of the time on the market forecast, and I'm looking forward to doing that. It's my favorite lens that I put over the market, and so we're going to take a look at that first thing. And bring your questions, of course, and trying to get to everything. And, of course, I don't know everything. If I don't know, I'm going to tell you. It's one of the things I like about doing that group coaching is because I probably learn as much as you do. I learn as much from you as you might from me. ZK, that was you, wasn't it, that requested that? I think there were a couple others that were kind of requesting that, but I'm looking forward to it. There's the link. If you're not registered, go ahead and register, and I look forward to seeing you there. Market profile, yes. Market profile. Mostly market profile. I think there's information that the profile provides that we can't really see in volume profile. They're both good, viable tools, but I prefer the market profile, which the difference is really price over time in market profile, volume profile, price over volume. Oh, wow, we're taking out yesterday's low right now. My goodness. All right, let's take a look. All right, let me get set. All right, starting with the daily in the S&Ps. All right. All right. Well, we had the third day in a row here with a decent opportunity at our weekly kickoff low. Unfortunately, today it's not going to be available for us in the regular trading hour session unless we get some sort of really good pullback up to that level. Taking a look, we added 12,000 new contracts in open interest on decent volume in futures and in New York. Weekly kickoff level was in play earlier, maybe not now. Volume and open interest higher at lower prices means the market is still accepting price at lower levels. The increase in open interest, however, has slowed a little bit, but we have new information that says maybe we've got some more continuation here. Be watching, of course, Delta throughout the day. I think that the decrease in the speed of increasing the open interest, we haven't kind of gone the other way yet, but it seems that we're going to need new business to continue this move to the downside much further. We may be providing that for us today. We've put in a low below yesterday. So we've got overlapping to lower range already. Let's take a look at the 30-minute chart and see if there's much we can get with help. So Monday morning, we talked about the idea that the weekly kickoff high and last week's low were going to be pivotal areas, and I don't think anything could have been more true than that. We did take some deep looks above, but when upon rejection, if we went the other way, if we looked for the short side, we were able to take advantage of some pretty decent price action. Before the numbers this morning, trading right back up to that level. The numbers came out. We knee-jerk lower. We've taken out the low of yesterday. We could open with a gap, which would, I think, be a good thing for the ability to limit risk, because if we open with a gap and we can't close the gap relatively early, I'll be looking for shorts to go in the direction of the gap. Now, thinking about volume, okay, volume was good yesterday. Open interest, we still had an increase in open interest on value, continuing to move lower. But how good of a job is it doing? What's it going to mean for us today? If we can't open with a gap, we open in range or in value, that may change my strategy a little bit. I may look for opportunities as the day goes on. Thinking about the fact that we've seen some slowing open interest, we've seen ranges closer together and even, overlapping kind of an inside or, an outside day yesterday, but I'm, going to be cautious on the long side. I'm only going to be trades that allow me the opportunity to limit risk. It's 8 o'clock now. This overnight low, if that remains, is going to be an important level for us to think about taking an execution in either direction, because it's going to allow us the opportunity to limit risk. It's very close to the low from yesterday. It's just below the low. When we're thinking about possibly the momentum maybe falling off a little bit to the downside, could it be true? We've got a lot to digest in the CPI numbers today. So, overnight inventory was long. That's now been resolved. Yeah, both days, all 3 days kind of look familiar. We just ditched that area, and ditched that area prior to the open. A little bit of a difference there, but still much the same look. Here's crude oil. So crude oil is in rollover. It is scheduled to roll on the 17th. That's a week from yesterday. We'll be watching volume to decide to take a look at when we're going to move from June to July crude. All right. Volume and open interest maintain a downside hint as of yesterday, but we have new information, and there's always rollover. We added 4,000 overall new contracts, but we lost 16,000 in the June contract. That's a function of rollover, and that's one of the things that makes open interest so blurry during rollover. Volume too, but we still put up some pretty good volume in that front month yesterday. So with the new information we have, the market is offering us an opportunity, yet another opportunity at weekly kickoff low. Thinking about rollover, thinking about where we are right now, we're back in our triangle formation, pennant formation, whatever you want to call it, and we're in rollover. There is a possibility that this market may fall into range and balance because the longer time frame is going to be focused more on getting a cheap rollover than trying to become directional. Don't let me kid you. They will become directional if pushed, and we are at one of those levels where we think they may get pushed. Yesterday, we looked at weekly kickoff low. We drove lower. We had an increase in open interest on a down day on decent volume. Leads me to believe that this was maybe medium or longer time frame traders continuing the push to the downside. Now we're back up here, right in the area where that move started yesterday, ended the day before, started yesterday, continued. If we do fall into range, I'm afraid that the weekly kickoff $103 level might be somewhat magnetic. We may trade above and below and above and below. So I got to be careful looking at this as a pivotal level where I want to be long above or short below. It may be the exact thing to do, but as we all know, anything can happen. Anything can happen. So Rick is saying, CPI out in the market. Markets are oversold. Correction possible. It's exactly what we were talking about in the slowing of increase in open interest, the overlap of the ranges for the past couple of days. It's giving signs that the downside auction is getting tired. ACH. And you're talking ADHD, Rick. But I'm thinking a correction is possible. If we can't push this market and bring in new business to the downside, this thing could whirl around and we could see some definite short covering. ACH, there you go. Anything can happen. All right. Let's take a look here. We've got the opening range, which is the low of the session, which is just below $103, and we are seeing some continuation to the upside. It's a 43 tick opening range, which I hate that because it just gets to be too rich. And well, we're going to see what it looks like here. We've got the opening range, low of the session, now above an inflection point. I'm not really in that much of a hurry to try and get into a trade here, though. The opening ranges have been tough. We've got our overnight high here, our overnight low here. I think there's room for us to let this market range a little bit before finding direction. And for the NASDAQ, so weekly kickoff level was in play again this morning. It's kind of similar, though. The only difference is the weekly kickoff is above last week's low. But this area up here has been providing great opportunities. Unfortunately, again, we are going to miss that in the regular trading hours. Added 1,500 in open interest yesterday on an overlapping to lower day, but we did close higher. So there's maybe some kind of confusion as to whether there was new selling coming in or potential new buying coming in. But I'm thinking that when this does turn, it's going to be a drop in open interest because maybe we've gotten a little bit too short, like my brother said. My question is here again, what is the attempted direction of the market and how good of a job is it doing in that direction? Adding 1,500 in open interest yesterday. I believe that's new shorts coming into the market. We still held up volume pretty good. Here's the 30-minute. So this push to the downside was where the majority of the volume was for the day. We seem to get too short in the daytime frame yesterday. Are we getting too short in the longer time frame? Excellent question, my brother. I've got that written right here. How good of a job is the market doing in that direction? The zone between weekly kickoff low and last week's low, important area. We looked at that Monday, and it's been proven 2 times. We saw value expand yesterday. We've got the market ready to open with a gap, without a gap, in range, outside of range. This is going to be kind of critical for us to be thinking as an early trader. If we're thinking about getting in early, I'm going to ensure that the opening range trade is going to work because I'm not going to do it. The opening range trades have been really tough lately, and I'm certainly not going to do it if we don't open with a gap. We're seeing the market kind of leak back into range and value from yesterday, so this might be just enough for us to see our shorts start to get a little bit nervous. We had overnight longs, that's been resolved. We opening with a gap, without a gap. The knee jerk to the CPI numbers. Usually, as Dalton says, the initial knee jerk ends up being the direction for the day. But the situation we're in, trying to continue to move lower without much success, we just put in a new low. Well, just about exact to overnight low. Overnight low was 12.102 quarter, 12.101 quarter. 4 ticks below it. Coming back into range and value may give us opportunities to look for entries at value low, if for no other reason than it gives us the opportunity to limit our risk. Gold. Gold is now falling into rollover as well. The schedule for rollover from June to August is the 26th of May. So we're starting to come into rollover, which again will make volume and open interest a little bit blurry. Downside auction is intact and appears healthy per volume and open interest. Higher volume the last couple of sessions. That's good. Or adding open interest, another 22,000 contracts added yesterday. So I'm starting to also get concerns that we are, again, possibly getting too short here. The market is attempting to move lower. It's been successful to this point. We did add 22,000 in open interest on lower volume, but it's just got my spidey sense kind of tingling, saying, We've come pretty long way here. If we can accept back above weekly kickoff low, there may be a decent opportunity for us. That's only if we can accept above that level. Yesterday on the push down again, we added 22,000 in open interest. That's pretty friendly to the downside. Overnight inventory was long. That has now been resolved. We failed to take out the overnight low. What doesn't happen is as equal and in importance as what does happen. We're back in range. We're back in value. This gives us an idea of possibly some structure to look for longs below. If we do accept back above weekly kickoff low here, there's a little gap up here that is vying for repair. And then there's this naked point of control up here as well from last Friday, I believe that is. So if we do accept above weekly kickoff high, I think there's a pretty decent upside move if we've gotten too short. Yeah, certainly true today, PD. The markets are showing a little bit of irrationality, and they can stay irrational longer than we could stay solvent. But it's that I've always kind of felt as though that the markets are just a reflection of the people trading them. So the irrationality in these markets is solely created by the participants. Markets are logical. It's the traders that are illogical. So here we are, right back to point of control from yesterday. All right. Another big yawn here for the euro. When is this thing going to make a move? We added 1,100 in open interest yesterday, but volume continues to drop. We had a little uptick, a little downtick. The market is still bringing in open interest. Overall, the open interest has been increasing through this range-bound period, which indicates potential change and bigger opportunities outside of this area of range. And here we are. Nice knee jerk. Nowhere near our low here. Weekly kickoff low. We're back in range, back through value. Be patient. It's all I can say. One of the things that I do want to show you is we had eventually, I believe, some slight positive delta here. Just about even there. Negative delta as the price moves higher. Negative delta, negative delta, negative delta, and a little bit of positive delta yesterday. But the consistent negative delta that we've seen over the past 4 to 5 sessions is indicating that we've got some shorter time frame sellers willing to hit the bid to get into the market, but the market's not moving lower. Is there a hint with the open interest increasing and negative delta that we've got some longer time frame buyers down here accumulating longs over a period of days? If this market does break out the upside and get some legs, I think there's a pretty powerful upside move here. And that's kind of why we've got weekly kickoff high as we have it. Because if we do get a breakout above this area of balance, I'm looking at a pretty substantial move and a potential market state change if that happens. Now, the dollar's been very strong, and that's why we're kind of hanging around here. We also have the fact that we've had 1, 2, 3, 4, 5, 5 of these days that have approached weekly kickoff low. Are we starting to exhaust the buyers down here? this range bound activity, even though we've been adding open interest, has done a good job of taking care of any oversold conditions in multiple time frames, because this area of consolidation and balance is just evening out inventory. And if there's a longer time frame inventory adjustment to the long side here, eventually all these short time frame traders are going to end up too short, and they're going to perpetuate the move to the upside. If we do take out the weekly kickoff low, then that's going to create another possible inventory adjustment for longer time frame traders. Here's the 10-year. We're just looking at a potential bear flag. Loss of open interest on the up day yesterday kind of says we're not bringing in buyers. We're getting out of some shorts down here, and getting out of shorts takes buying power away from the market. Downside structure still remains here. Take a look at the 30. You get a better picture of this bear flag, which unfortunately we broke out at 7:30, and we may see this thing continue all the way to weekly kickoff low, because that's basically the flag, the bottom of the flag stick, if you will. So this number at 7:30 really kind of ate up some of our early opportunities for day traders that only trade in regular trading hours. But yeah, this is a pretty sweet breakout below that weekly that bear flag. That gas, you got a nice recovery from the lows from yesterday. Open interest dropped 9,200. We got we covered some shorts yesterday. It's a P-shaped profile. It's been kind of a tough time trading and holding anything below weekly kickoff low. We closed below it on Monday, back above it yesterday, and we're trading back above it today. Here's the 30-minute chart. Here's that P-shaped profile from yesterday. We got a little bit too short, it looks like. We have delta congruent with direction, which is typical for a liquidation event, which took us right back above weekly kickoff high. We closed above it, and here we are, opening with a gap. If we can't close this gap relatively early, I'm looking for opportunities to buy weakness. All right. Sorry if I got a little bit long-winded there. And I'm looking forward to, at the very least, an interesting opportunity to learn something today. Some of our early opportunities, I think, have been eaten up by the CPI numbers, but we've got a lot of digestion to be thinking and looking at as far as how the markets are going to treat these releases throughout the whole session today. Dan says a lot of funds have to liquidate. Be careful. Lagarde on the bid at 105, I think. Yep. Yeah, it's getting close. Yeah, be careful out there, folks. Group coaching today, 1 p.m. Central. Recap, 3 p.m. Central. Let's get together and see what happened today. See if we got some good trades in, and see how this day winds up. Kevin Laffey, the 10-year yield breach. If the 10-year yield breaches 3.25% on the upside, it would be a 10-year new high. The first time that's happened in the 10 years since 1981. Yes, volatility creates a lot of opportunities and a lot of risk. Be careful out there. Take your deep breath. Stay humble, grateful, and creative today. Don't forget to be good to yourself and be good to others. Say a prayer for world peace. See you for the group coaching, 1 p.m. There was another request from Nico. Tips for getting out of a losing streak. We'll take a look at that too as well, Nico. Looking forward to seeing you. Trade well until then. Manage your risk. Be patient. And see you at 1 p.m. for group coaching. Have a great session today. Get out there and profit.